Welcome, everyone. Good evening. Thank you for joining us for MEFA's webinar, College Financing for Families of High School Juniors. So my name is Julie Shields-Rutina, and I am the Director of College Planning, Education, and Training at MEFA. And I have been working in the field of higher education financing for over 30 years. And I really like to share as much information as possible with students and with families to help through this process. So I'm so glad that you're here with us this evening. And I have my colleague, Jennifer Bento-Pinion, and she's joining us tonight as well. And she is going to be behind the scenes, seeing your questions and making sure that they all get answered and bringing some up to the group, and some might be answered behind the scenes, and we'll try to cover as many as we can. Now, just a few logistics. We are recording this webinar, so we will send you a follow-up with the webinar and the slides so that you'll have that. And also, if you want to ask a question, the best place to ask it is put it into the Q&A section on that's right on your screen. And that way we'll be able to be sure to keep track of it and make sure that that it gets answered. If you want closed captioning, you can hit the live transcript feature, and then you'll be able to see the words that we're speaking. And you can leave the webinar at any time, but we hope you'll stay. So a few other notes about MEFA. MEFA is a not-for-profit state authority that has been around since 1982. And we continue with our mission that we've had since 1982 of helping families plan, save, and pay for college. So we have the Massachusetts College Savings Plans, the U Fund and the U Plan. And we also have low-cost loans for families that need that type of financing to help with paying for college. And then everything else we do is all about guiding students, guiding families to find their path and be able to pay for it. And so the webinar tonight is just part of that, the way we try to get out as much information as possible on all of these topics. So tonight's topics are the following. We're going to talk about the types and sources of financial aid, and then we're going to review how you apply for financial aid. Then we'll talk about how colleges make decisions about who gets financial aid and how much. And we'll go through some of the ways families pay for college so that you'll start to be able to think about a plan for your own family. And all along the way, we'll tell you about free resources that you can use to help you with this process. So, types and sources of financial aid. So what is financial aid? Simply, financial aid is any money that is going to help a student pay for college. But there are three main types. There are grants and scholarships, and that is the best type. So that is gift aid. That is money that's given to the student, and the student does not have to repay that. And those terms, although sometimes they mean one thing or another, in general, they're a little bit interchangeable. And the most important part is just to know that they both mean free money that doesn't have to be repaid. Again, best type of aid. And then two other types, though, are federal work study. Work study is a very large federal program, and many students are awarded work study when they apply for financial aid. And students don't receive money up front from that program. But what that allows is it allows a student to start college and get a job, most of the time on campus, sometimes off campus, and be able to work maybe 10 to 12 hours per week and be paid. And so they just get paid as they go along. And that money usually gets used for miscellaneous personal expenses during the school year, during the academic year. It could possibly go for books. More often, it probably goes for personal expenses like shampoo or late night pizza or bus transportation. Really, that's spending money. And then the third type of aid is federal student loans. And I know that people sometimes say, loans, that's not financial aid. Why is that part of this? Well, we're going to talk a little bit about the uniqueness of the federal student loans and why they are considered aid. So that is the third type of aid, and a common one. Most students receive those federal student loans in their financial aid offers. And then what are the sources of this money? So the sources of this money are basically 4 places. So the federal government has financial aid, and there are lots of different programs, grants, work study, those loans I just mentioned, tax incentives. And you can find out more about the federal government's aid at studentaid.gov. Massachusetts has state aid in the form of grants, scholarships, tuition waivers. And so you can find out about Massachusetts state aid as well. And then the colleges and universities themselves have a lot of financial aid to award to their students, mainly in the form of grants and scholarships, but also sometimes some institutional loans. And let me stop there for a moment and say, when we talk about this financial aid process that we're going to cover tonight, just know that when you go through the financial aid process and apply, you are applying for all federal, all state, and all college or university aid. So really that one process is applying for all of those types of aid. Now, the one type of aid that's kind of outside of that is money from other agencies, maybe private scholarships. We call them, private scholarships, I guess is the best way. And that's money that other organizations set aside for students, and students can go and look for that outside of the financial aid process. And we'll talk with you about how to do that. There are some great tools you can see here on the screen. MEFApathway.org is a great free student college and career portal that students can go set up an account and utilize. And it has a wealth of information all about applying to college. And one of the things in there is also a scholarship search. So students can use that. And then there's another one called FastWeb. Your school counselor at your high school probably knows of some local scholarships. So that's a separate process, but one that students should definitely take advantage of. And so now let's just talk about those federal direct student loans. Why are they considered financial aid? Well, let's take a look at these bullets. Number 1, the student is the sole borrower. No cosigner is necessary. The student is the person borrowing the loan. So, they're 18, they don't have a credit history. That makes this a special type of a loan. So just in the student's name allows them, when they pay it back, to put together a credit history, all of that. And there's no credit check on these loans. These loans are awarded based on the fact that they're going to college in the hope that they will get out with a job and be able to pay them. There are 2 types of federal direct student loans. Most students receive a mix. Subsidized. The subsidized portion means that the federal government pays the interest while the student is in college. And the unsubsidized portion just means that the federal government does not pay the interest while the student is in college. It does accrue. But these loans do not have to be repaid until after the student graduates, either subsidized or unsubsidized. Currently, the interest rate is 3.7%. That usually changes every year and will probably change this July again for 22-23. And then probably the most special feature is that there are many repayment options when it comes time to repay these loans. So first of all, no payments are due when the student is enrolled. And then there are multiple options at the end, and the student can choose. Now, if a student were to borrow every bit of federal student loan that they're eligible for while an undergraduate in college, you can see on the right, there are limits per year, $5,500, $6,500, $75,000, and $75,000. They would be borrowing about $27,000. And upon graduation, the estimated monthly payment on that would be about $300 a month for 10 years. That's in the regular repayment plan. But students can choose another plan if they're not able to make that $300 payment. They can choose a payment that's tied to their income and pay a lower amount for a little bit of a longer time. So, and many options there. So the student will learn about that and be able to make a good choice. And you can always pay these loans off early and pay less interest. Finally, there are some deferment, forbearance, and forgiveness opportunities on these loans as well that you don't find on other loans. So now let's talk about that financial aid that is awarded. It's really awarded based on one or two factors, and sometimes it's a combination. So one reason that financial aid is awarded is based on merit. And merit is really about student achievement, and it can mean many different things, mostly academic achievement, but it can also be athletic, artistic. Basically, each college each year thinks about who they want to bring in for a class. And of course, they want to bring in the best students possible with the highest academic credentials, but they also want to have someone who's going to be in the business school and someone who's going to study engineering and someone who's going to be in the choir and someone who's going to play on a sports team. They want to bring in a diverse group of students from all over the country, all over the world, whatever the strategy for the class they want to bring in. They use merit money to do that. So if your student is, in the top of the admissions pool at a certain college in a certain year, they are very likely to receive some merit-based aid for colleges that award merit-based aid. And again, it's different for every college every year. And so that's why it's always a good idea to apply to a number of colleges, because you can't count exactly on which college would give you a higher amount of merit aid in one year to another. Let's just say a couple of things you should know are when you receive merit aid, you should understand if it's renewable in future years. Sometimes colleges will say you have to keep a certain grade point average. That's common. Is there a separate application? Sometimes there is, many times there isn't, but you'll want to look on the college website for that. And I guess that's all I'll say about merit aid. And then other financial aid is awarded based on need. And then that's financial need based on the information that you submit on the financial aid applications. And so the financial aid applications have a standardized formula to determine a family's financial need, and then financial aid is awarded based on that. So that's important to know. And you'll see as we go along that sometimes some financial aid offers are kind of a combination of need and merit. All right, so the application process. I'll just stop for a moment, Jennifer, in case there are any burning questions.
Actually, no, there aren't any outstanding questions at this time. Thank you.
Thank you. So let's talk about the financial aid timeline. When should you apply for financial aid? Well, what you should do is check on the websites of all of the colleges that you want to apply to and make sure you find out, just as you will for the admissions process, what are the deadlines for financial aid and what forms are required. And know that many colleges will have multiple deadlines. So if a student is applying early action or early decision in the fall, they probably want to apply for financial aid in that early time frame as well. And so the financial aid deadline might be in October or November. If the student is applying on the standard admissions application deadline, then the financial aid deadline might be in February or March. The key is you don't want to be late. You want to make sure you have your applications in by the financial aid deadline. And because of that, I sort of am going to recommend an easy strategy. And that is that the financial aid forms, the FAFSA and the CSS profile that we'll talk about, open up and are ready to be completed on October 1st. So in the fall of senior year, just plan to get those financial aid applications done in October. And if you get those done in October, you are putting yourself in a really good position to just be ahead of all of the deadlines and meet all of the deadlines. So I'd say that's the easiest way. It doesn't have to be done on October 1st, but on October 1st, you should think, let's pick a night and sit down and get these forms done. Another tool that can help you is MEFA's College Application Manager. So you can download that. And that's just a way to keep track of the list of colleges that the student is applying to and what is required for admissions and financial aid and the deadlines. So take a look at that, or you can just create your own spreadsheet or find another way to stay organized with the process. So let's talk about the FAFSA. The FAFSA is the main financial aid form that you have to complete. So it's the free application for federal student aid. It is free. There have been some scams online that try to charge students. You will not be charged for the FAFSA. It's free. It's in the name. And all colleges require the FAFSA. So you go to FAFSA.gov, or you can actually download the app, My Student Aid mobile app, and complete the FAFSA there. And you can always start the form, save it, go back to it, save it again, and you can go back and forth between FAFSA.gov and the mobile app. So just make sure you save as you go along. A couple of things you should know. The first step is always going to be to create an FSA ID, which is really a username and password. And both a student and a parent need an FSA ID. And that's how you'll log in, log back in, sign the form online, all of that. Something else you should know about the FAFSA is that there's another tool inside the FAFSA called the IRS Data Retrieval Tool. And that allows you to pull in information from a tax return so that you don't have to type it all into the form. And that significantly cuts the time it takes to complete this form. So if you're able to use that tool when it comes up for you, there are some families that aren't for different reasons, but many families can use this tool and use it, and you'll pull all of your information in one fell swoop. We also, MEFA, will have a webinar in the fall each year that sort of goes line by line on completing the FAFSA. So you can always come back to mefa.org/events and find that webinar, or you can just try it yourself and know that we're here to help if you run into any issues. So what goes on the FAFSA? Well, a lot of general information like student citizenship status. I will mention quickly that if a student is a citizen, but parents are not US citizens, the way around that is that the parents just put zeros in for the Social Security number. And then at the very end, because of the zeros, the parent won't be able to sign the form electronically. So you just have to print the signature page, sign it with a wet signature, and then mail that one page back to the address on the form. So that's the one little bit of a difference if parents are not US citizens. And then also on the FAFSA, the student will put the colleges they're applying to and information about parents and parents' marital status. That's including same-sex parents, all parents who live together, married or not. In the case of a divorced or separated parents, it should be the custodial parent, the parent that the student lives with more during the past calendar year, that would fill out the form. Now, if that parent is remarried, it would be that parent and current spouse. Legal guardians are not considered parents for FAFSA purposes. And then other things on the form are the number of people in your household and the number of children in college. And then there's lots of financial information that will be collected. So for 23-24 FAFSA, which if you are a junior in high school, parents of juniors, You'll probably be completing this form in October of 2022. And the tax year in question that you'll be pulling information from will be your 2021 income tax return. So that's a lot of years mixed in there, but just remember that. So you're basically using the tax return that is completely done from the year prior, which in this case would be the 2021 income tax return. You'll be putting information about taxed and untaxed income, and then some assets like savings, checking, investments, other property, 529 plans. But there's some things you won't be putting on the FAFSA. You won't be putting any information about your primary residence, your primary home. You don't have to put any information about the value of your retirement savings, life insurance, or the value of a small family business with under 100 employees. So that's good. Those things will not be reported. And there isn't really a place to put debt on the form, except for any debt you would subtract from reported assets. So just be aware of that as well. And then, so I mentioned all colleges require the FAFSA. Oh, did you want to run a question?
Oh, yes. Could I
Yeah.
bust in? Okay, so we did have a couple of questions around the specifics on the FAFSA. So here's a good one. If legal guardians are not considered parents, how does this work for guardians?
Yeah, that's great. So basically, the student, if the student doesn't have a parent to complete the FAFSA, the student would complete the form on their own and then be considered independent. And they would have to show that, but that is how that would work.
Okay, thank you. And then another question, is the FAFSA process different for transfer students from different countries that are not US citizens?
So unfortunately, in order to receive any federal aid, which, the FAFSA is a federal form, students do need to be US citizens, permanent residents, or there are a few other statuses that qualify, but international students usually don't complete the FAFSA. So, but I'm going to talk about the CSS profile because international students can complete the CSS profile. So I think that answers that question.
Yes, that's good. Thank you, Julie. Yep, that's all for now. Thank you.
So good. So this is right on time to talk about the CSS profile too. So the CSS profile is a form that's from the College Board, and not all colleges require this additional form, but some do. So that's again why it's important to look on college websites and make sure you understand what forms are required to apply for financial aid. And if a college requires the CSS profile, you need to do this one as well. Now, the CSS profile, you might ask, why do we have to do another form? But colleges that require the CSS profile usually have a lot of their own grant and scholarship dollars, and they need a little more information than the FAFSA gives to be able to determine how to award those millions of dollars, honestly. So if your college requires it, complete the CSS profile. Now, there is a fee for some students, but if parent income is under $100,000, then there is no cost to this form. But if not, then it's $25 to submit for the first school and $16 for each additional college. This also becomes available October 1st. This asks a little more information about businesses. If parents are divorced or separated, the other parent who didn't, complete it with the student will have to file their own CSS profile. They're kept separately. No one can see either's information or anything like that, but that's a little bit different too. So MEFA can also help with some details of the CSS profile. We have another webinar in the fall about that. Lastly, sometimes colleges have their own financial aid application. I'm seeing that less and less, but it's good to look on the website to just make sure you're not missing out on, it might be a one page sheet to fill in a little additional information. So then after you apply, you've put the colleges that you're applying to on these forms, and electronically all of your information goes to the colleges. And then you will receive a student aid report back from the FAFSA and an acknowledgement back from the CSS profile. And you can go through, make sure there were no errors, and just be aware that part of this process is that the college may then be in touch with you for additional information. So make sure you pay attention. Once you apply for financial aid somewhere, make sure you read your email, follow up with any documentation they might need, all of that. And again, verification, if a college is asking you for that, it's a normal part of the process. They have to verify a certain percentage of the applications, and then some colleges verify all of the applications by collecting tax returns. They might ask you to verify that the student has a sibling in college. They might ask you to verify your asset account statements. So just be aware that all of that is part of the process. Sometimes the questions may come through email. Some colleges have a web portal for all of their information, and they'll send you information about how to log on to that, create an account, and that's where you can go to look and see if there are any missing documents or if any additional information is needed. There's a lot to stay on top of with this process. And so let me say a word about the financial aid office here. Once you've applied to a college and applied for financial aid at a college, just know that the financial aid office is a really good resource for you, because they're going to have all the answers about their specific college. So for example, if at some point you receive a financial aid offer and you want to know if it's renewable in future years, that's a question for the financial aid office. If you win some private scholarships, you do some work looking for scholarships and you are bringing those with you, you can talk with them about how that's going to affect your financial aid. Are you able to lower your loan amount by using that additional scholarship? So you'll want to ask them any questions to just give you a good sense of what you can expect for 4 years, especially if after you apply for financial aid, you have any changes to your family circumstances, someone loses a job, someone gets sick. By all means, call the financial aid office, share that information, and see if they can help you with anything. And even early on, before you commit to attending a college, if the financial aid that's offered is not going to be enough to have you attend, you can appeal your financial aid offer. You can give more information, explain things a little bit better. And that's absolutely a part of the process as well. Check on the college website to see what's the best way. Should you call? Should you email? Do they have chat? Do they want you to set up an appointment? Find out the way that it's best to communicate, because all colleges are different that way as well. Okay, so now we'll talk about how financial aid decisions are made. You've done your part, but you're going to stay on top of it. Well, here's how a college decides who they're going to award financial aid to and how they're going to do that. So the college first has to figure out, what is the cost of attendance? What is it going to cost a student to come to school here for 1 year? And part of that cost of attendance is the tuition and fees. That's usually the biggest part. But also, if a student's going to live on campus, it's room and board. It's then other things like books and supplies, transportation, personal expenses. So you'll see that some of the cost of attendance is billed expenses that are going to be billed to you up front, and some is just expenses that students will incur during the year, but they need the whole amount. They need to be able to cover that whole cost of attendance to be able to comfortably be a student at that college. And then you complete information on the financial aid forms. And so they look at that information and put your information through a formula. And what that determines is your expected family contribution. So that determines how much you can pay toward that cost of attendance based on these formulas that are used. So I will say that this EFC always feels high. And that's because it really isn't an amount that anyone expects that you have under the mattress or in your checkbook ready to write a check. It's more an amount comparing your family to all of the other families applying, and about how much it's felt that you can absorb in college costs given your financial situation. So that's what this expected family contribution number is. And again, it's usually higher than we want it to be. If it's anything more than zero, it can be zero for some families. Some families, it's determined, really don't have any extra money to pay anything toward college once other expenses are paid. So it could be zero. But if it's anything more than zero, it's going to feel high to that family. So then that cost of attendance minus your expected family contribution is your financial aid eligibility. And then that's what the colleges work to create a financial aid offer to fill in your financial aid eligibility. Now, there are some colleges who will say, we promise to meet 100% of full financial need for 100% of our students that we admit. And those colleges, it's wonderful that they can do that. And the Ivy Leagues are a group that commit to that. And there are other colleges, some of probably those names that you know of elite colleges that have some deep pockets that are able to commit to that. And that's wonderful. And if so, you as the student would receive a financial aid offer that would total that financial aid eligibility. But other than those colleges that promise to do that, many other colleges can't make that promise, or they can't make it for all students. They might make it for some, but not all. And so what those colleges do is they try to do the best they can to meet that financial aid eligibility, but sometimes there is a gap. So this is just an example of what a financial aid package might look like. Okay, so a financial aid administrator might say, okay, we have a cost of attendance of $45,000 at this college. And so how am I going to build a financial aid offer that's going to give the student enough money to come to the school? So first they're going to say, all right, well, this family has an expected family contribution of $5,000. So that's part. And then we're going to give this student a grant of $17,500 and a scholarship of $10,000 and a student loan that we talked about of $5,500 and a work study award. And that's the financial aid offer we're going to give. Well, that doesn't quite meet $45,000. There's a little bit of unmet need on top. So this is one of those colleges that doesn't have the resources or the policy or whatever in this year to be able to meet the full need of all students. So they've left a little bit of a gap at the top. So I think what's important to know here, you might receive financial aid offers that don't fully cover your need. And so then you're responsible both for your expected family contribution and any unmet need to be able to have enough money for the student to be able to attend. So if you want to just get a little bit of a jump and understand what your EFC is or what kind of aid might be available at certain colleges, there are calculators called net price calculators on every college website. If you just type net price calculator into the search bar, and you can put in information as you will on a financial aid form. And what will pop out is an estimate of what you can receive, what you could receive as a financial aid offer from that institution. And that's helpful. That's just helpful as you're researching colleges, as you're thinking about putting together a list of colleges to apply to. However, I wouldn't make any hard and fast decisions based on these net price calculators because they're based on estimates. They're not definite. You really won't know the full financial aid that you'll receive until you go through the real process. But I'll just share how I used these calculators with my own kids. So if we played around with the calculators and we saw that some colleges would give more financial aid and some less, I wouldn't say to my son or daughter, don't apply to this college. I did the net price calculator and it looks like they only gave a small amount of financial aid. I wouldn't say don't apply. But what I did say is make sure you have some other colleges on your list that seem to show a little more flexibility in the financial aid that they award. So we make sure you have good choices and options senior year when these admissions offers and financial aid offers start coming back. So I just think it's good to help in the plan. And I wouldn't shut anything off because of it, but I think it's important to start to have those conversations with your kids. And then this is a slide that is going to show what many of you will probably experience senior year once admissions acceptances and award offers start coming in. So this shows 3 college financial aid offers to the same student. And in this example, the cost of attendance for all of these colleges is $45,000 and the family's expected family contribution is $5,000. So the total eligibility for this family is $40,000 in financial aid. And you can see that these 3 colleges gave very different financial aid packages. And that is what you will see. That's what happens. Sometimes they're even more wildly disparate. So in this example, College A is one of those colleges that meets full need. So through grants, scholarships, loans, and work study, College A met the full need gave an award of $40,000 to this student. That's beautiful. College B still gave a lot of financial aid, but only up to $33,000 and left a gap of $7,000 that isn't met. And College C then left even more of a gap. And so this can be a kind of a difficult time sitting down and looking at these offers. What you want to hope in this case is that College A is your student's top choice and you love the college as well and they met full need and life is good. We know the way things go in life, right? That it's very possible that your student will say to you, but I want to go to College B, or but I want to go to College A. Sorry, C, that's my favorite. And that's when it becomes a real conversation at home first to talk about, wow, well, how would we come up with this extra money? And is it worth it? Does it mean there's going to be additional debt taken on? And could we go back and look at College A again? And maybe there were some questions you didn't ask. Maybe you can find out if they really have everything you do need in that program. And having those types of conversations, as well as you can also go back to College A and just be honest with them and tell them, this is, my first choice. I'm sorry, College B or C. This is my first choice, but we didn't receive as much money. Wondering how we're going to do this. And the college might say, well, can you tell us anything else? And have a conversation with them and see if possibly there's something else that they can do to increase the financial aid offer. Now, they might say, I'm sorry, we gave you the best award we could. Or they might say, tell us a little more and we'll see if there's anything we can do to help, lessen that gap. So this is kind of a challenging time that I'm just preparing you for, but I'd say just expect it and make sure that your student has a good list of colleges, all of which they would like to attend on their list. So it keeps those choices and options open when you get to this point. And this is just another example to encourage you to really pore over these financial aid offers in detail, because here are 3 financial aid offers that look like they're giving you the same amount of money, $35,000 here, but they're really not. Some are giving grant and scholarship and one isn't. Some put something in here called a parent loan, which is not financial aid, because a parent loan, we'll get into this, is something that there's going to have to be a credit check, and this is not a definite amount of aid. Some gave work study, some didn't. So it's just very important to understand the elements of the financial aid offer. Now stop for 1 minute, Jennifer, in case there are any other questions.
Yes, so there was one going back to the federal loans. And if it's offered that income-based repayment plan, is that an offering for those federal loans?
Yes. So income-based repayment plans are definitely an option for all students. So the student will, even before they will be able to learn about the loans, because to take federal loans, they have to do a little learning online and take a little quiz so they have an understanding of these loans. But upon graduation, they will be able to choose a repayment plan, and income-based repayment plans are definitely always an option.
Okay, great. And I think that does it. No other outstanding questions at this time. Thank you.
Oh, thank you. All right, so now we'll just talk about, we're getting way down the line. So for the timeline, this is then going to be happening, after May of senior year, but good to just have a picture of how things will go. So usually by May 1st, the student will have to choose a college and then commit, put down a deposit, all of that. And then the bills usually come out in the summer, June or July, due in July or August. But before a student commits to a college, it's good if parent, student, you have figured out generally how you're going to finance it. You would hate to have the student commit and then try to figure out how you're going to pay for it over the summer and realize that's not possible. So you do want to do a little bit of this work even prior to May 1st. So this is just one example. Let's say that the student receives an aid offer and there's a balance due of $20,000 for the year. So there are lots of ways the conversation between parent and student could go at this point. One way is to say, $20,000 is not possible. I don't know how we'd come up with that. That's not just 20, that's 20 times 4, probably. So let's look at those other colleges that you liked that are second choice, third choice. Let's look at those. Let's see if we can find a college that is more affordable for us as a family. So that's a definite option, way to go. Some other ways to go would be to, we'll talk about some other options of lowering the cost. But let's say you decide as a family, all right, we can do this. Well, how does a family come up with $20,000? You'll all do it a little bit differently. And all of the families that I have worked with over many, many years have put this together differently, but usually it's a mix of all of these things we're going to talk about: past income, present income, future income. So this is just an example of how one family might pay a $20,000 bill. This family might say, well, student has some savings. Student, you worked a great job last summer, so we're going to use $1,000 of your student savings. And we as parents, we've saved some money in a 529 plan, so we're going to use $4,000 of that and pay that toward first year. And then all colleges have something called a payment plan, where it's not a loan, but they sometimes charge a processing fee of $65 or something, and then it allows you to pay the bill in monthly installments. So in this case, this family might say, all right, well, we had a car payment and we don't have that anymore. So now we're able to pay $500 for 10 months. And we're going to pay that to the monthly payment plan. So the family might do that. And then the family might say, and we're going to borrow a loan of $10,000. And that will bring us to the $20,000 balance. Now, that can work for one family, might not work for all. It might be different from year to year, but that's just an example of the kind of the mix of how people end up paying the bill. So when figuring out how you as a family are going to do this, here are some questions and here are some conversations that should probably happen. So what if that $20,000 just isn't happening? So how about if the student started a community college? And we're going to show you a program in a minute called Mass Transfer. And that would allow a student to save a lot of money by starting in a community college and then transferring to a four-year college. Also, as parents, you want to think about, do you have other children coming up after this student? So you have to think about that. You want to be able to help the student as much as possible, but you probably have other students to help, and what's reasonable there. And again, you want to think beyond the 1 year, because you want to think about, it's probably going to be 4 years. Now, you also know that the student probably is already borrowing the federal student loans, which is about a $300 payment post-graduation. So it's really important to think if there is going to be other debt. Other debt usually has to be between parent and student. Students can't borrow on their own over those any more than that federal student loan. Any other loans, the student is going to need a cosigner. So when thinking about that post-graduation monthly payment on any other debt, is it reasonable that the student could take that on? Maybe, maybe not. Parents, is it reasonable that you'll be able to pay that? So you want to think about that. Students really want to think about their own goals as well. So let's think about, what if the student is applying to an engineering school, and the engineering school has all of these statistics that show that high percentage of the graduates graduate and get jobs that pay $80,000. I have seen this with some engineering programs. Well, then the student might think, I think I will be okay taking on that tiny bit of extra debt. I think I'll be able to do that. You never know for sure, but that seems like that may work. But let's say the student really has no idea what they want to do upon graduation, then that's a little bit bigger of a risk to think that you'd be able to take on additional debt after the federal student loans. So something to think about, the potential starting salaries. Also, does the student want to go to graduate school? And so maybe keeping debt down on the undergraduate side will help with that. Finally, all of these other loans will require a credit check. So it's good to know if you have decent credit that will allow you to be able to borrow. So I mentioned starting at a community college and transferring to a four-year college. So Mass Transfer is the program in Massachusetts. It is worth looking at this website. And there are so many ways that a student can start at a community college and then transfer. And the benefits include guaranteed credit transfer, tuition credits, freezes on tuition. You can really make a college education very affordable by taking advantage of some of these programs. And another program that can reduce the costs is called Tuition Break. And that allows students to go out of state to a public university out of state in the neighboring New England states and pay Massachusetts in-state tuition, even though they're going out of state. And that is only for certain programs that qualify, but there are a lot of them. And so it's worth checking out this website as well, the New England Board of Higher Education, to look into programs that allow that in-state tuition to be paid. And then just free resources. So MEFA is always here to help you with the financial aid forms that we talked about, but I think it's really important to know that you don't have to worry about this and try to handle it alone. There are lots of other resources too. We have a great program in Massachusetts called FAFSA Day. And in fact, my colleague Jennifer, who's here with me, is one of the co-chairs of the FAFSA Day committee. And if you go to the FAFSAday.org website in the fall, you'll see that they hold events where you can get one-on-one help completing the FAFSA. So that's a great program. Also, the Equal Opportunity Centers here in Massachusetts, you can go to massedco.org. They also will give free one-on-one help. And this is a timeline, so you can stay on track through finishing out your junior year into senior year. You can do some things now, like start to research colleges, visit campuses, college fairs, ask teachers for letters of recommendation, find out what the process is at your school, and possibly take the ACT or the SAT and start writing your college essay. So all of those things you can talk over with your counselor, but those are all things that you can start junior year. And then fall of senior year, if you are taking the tests, you might want to retake the SAT, ACT, make sure you have your letters of recommendation, finalize your college essays. Definitely, you can attend the webinars we have in the fall about the FAFSA, about the CSS profile, all of that. And then in the fall and into the winter, you'll complete your admissions applications, your financial aid applications, and all the while you can be applying for private scholarships. And then spring of senior year, you can come back to MEFA, and once you have all your offers in hand, we really help you again to compare them, to make a plan to pay, so that you can feel good with all of this process. So some things you could do now. I think it's a little early, but anytime you can do it. You can get an FSA ID for the student and parent, but just do that before October 1st. So you'll be ready to go, completing those forms in October. Really pour over those college websites of colleges you're interested in, understand the deadlines and what's required. Definitely stay in touch with MEFA. We are going to continue to have all kinds of webinars, and we have a great blog, we have a podcast. So rely on us early and often, and follow us on social media. We also post scholarship information on social media. And you can always call us or email us with questions. And we'll start with that right now.
We do have a couple. Okay. So here's one. So our federal loans based on graduation, so say in the future, 2027, or when applying, the year they're applying, say 2022, 23.
So I'm not sure I understand, meaning
the interest rate.
The
interest rate varies.
Yes,
sorry.
Great question. Yeah, so you'll apply for a federal loan each year. Now it is called a master promissory note, but it will be a new loan each year. And the interest rate will be in the year that you take it out, and it's fixed. So you could have loans at different interest rates, but at the end you're paying one whole loan, but they could be at different interest rates because that interest rate changes from year to year. That's a great question. I just didn't understand it. Yeah. Yep. So when you borrow a loan that first year in the year 23, 24, the loan will have the interest rate that is that for that 23, 24 year.
Okay, great. Thank you. And this question is around early decision applications. So how are those early decision applications influenced, if they are, financial aid wise? And would you be able to appeal or break the binding agreement if financial need is not met? And what impact would that have?
So a great question. So yes, if you're applying early decision, and I'll just say this for people who may not know what that is, but that means early decision is a very specific admissions process, not just like early action, but early decision is that you're saying to the college, if you admit me, I will come, I will attend, I will accept. And so that's kind of a tricky thing to do because you're really sort of saying, oh, I can pay and all of that. So basically what I would say, what I would recommend is to do your research, use those net price calculators on those college websites, on that college website, put in information, see what award offer comes back. You have to be reasonably sure that the award offer that comes back is going to be affordable for you as a family. If it isn't, you could even call the college, ask some questions, try to get as much of a sense, do your homework and your research to find out what type of an offer you could receive. But if it looks pretty good, and then you actually go through the process, receive an aid offer, and it's different and it's not enough, then you absolutely can go back to the school and explain that, and see, if you can work that out with them. And if not, if you can't afford it, you can't afford it, and there's nothing you can do. You will have to break that. But what I would say is you want to break it in good faith. In other words, you want to have done your work. In other words, you want to go into it in good faith, where you've done your homework, you've done your research, and you're making that commitment thinking that it is going to be affordable for your family. And then if something's a little off and it doesn't work out, well, that's unfortunate. But what you wouldn't want to do is do those net price calculators and find out that it's not affordable at all, and then apply anyway, and then somehow hope that it's going to work out. Then you're going to have a harder time. If you can say to the financial aid office, we did our research, we did our net price calculators, it looked like it was going to be affordable. I think no one can fault you for going into it in the best way possible.
That's great. Thank you, Julie. I think we got all of the questions. I'm going to answer a couple, just type in the answers. But I think we got everything else. Thank you.
Oh, that's great. And I guess what I would say again is, this is terrific that you're watching this. Student being a junior, you have some time. And so have fun researching those colleges, putting together a good list of colleges, and as well as having them putting together a great diverse group of colleges for academic reasons and social reasons, and geographic reasons. Make sure you consider affordability and have some affordable colleges on that list, and just put yourself in the best position so that next year at this time, it's an exciting time and you're receiving lots of award offers, and you'll have a really fun, good choice to make. And with that, please come back to MEFA often, email us, call us, stay in touch, and we are happy to help you through the whole process. Thank you, and have a good evening. Now, Jennifer, do you need extra time to type or anything?
Oh, maybe a couple. Yeah, maybe a couple
Okay,
minutes.
I'll stay. I'll
Just to-
stay.
We're good, Julie.
All right.
All right. Have a good night.
You have a good night too. Thank you so much.
Bye.